Devang Mehta as well joins in. And Devang, I'm going to pick out one of the sectors that's certainly going to be on the radar. Another month of a slowdown for the auto space. What exactly is it that you're doing within the sector? Are you cherry picking some select names at the current levels on a decline?
Good morning. Thanks for having me on the show. I think, yes, clearly a lot of pessimism has been made out of not only the auto sales numbers, but even the numbers or the actual, I can say, the balance sheet and the P&L of the company or the results that come out. And it's been an extended slowdown, so no denying that. The festive season was bad right from August to October, November last year. And again, it continues in the new financial year as well. I think now the market has started to expect a lot of reforms, or I can say a lot of tax cuts from the government, which plays out or does not play out, nobody knows. But I think clearly it's a pessimism that the demand will not come back. Why has the demand suffered? There were 2-3 instances. One, of course, as we know, the insurance, the years of insurance were sort of increased for cars and bikes. The second thing was, of course, the NBFC crisis. And the third was sort of crisis of confidence or rural slowdown, which you can say, which impacted the companies or which impacted the sales. I think after the election results and a bit of stability, and if the economy picks up, hopefully with a good monsoon, of course, we can't say the monsoon will be good. But I think it's a lot of pessimism priced into the auto stocks. To my sense, somebody, not even a contra buy, but a value picker would like this type of stocks to at least make 15-20% CAGR for the next 2-3 years, if not more. So yes, we are selectively cherry picking in the auto sector, of course, not on an aggressive basis, but yes, going slowly, accumulating it on every dip, because the pessimism comes and the stock price again comes down by 5-10%. So that's what we are seeing, and that's why accumulation is advised.
Okay.
Devang, good morning. Budget week. How come there are no fireworks, no excitement, no budget talk?
Good morning, Nikunj. Yes, I think very clearly it was a market which was sort of pessimistic under the global scenario as well. I think over the weekend, at least the developments say that the rhetorics of global trade war or US-China seem to at least have settled down. Of course, nobody knows that when a further tweet would come in, but I think it seems to have settled down. On the local side, there is, as I said, the macros are not playing out as per what would be desired for the economy and for the markets as well. Budget, yes, I think there are a lot of talks about the budget, but people know that February already or January already the foundation stone was laid out. How much more can you expect from a government who has just again resumed back into power? Of course, they would have a lot of agenda on their sleeves, but how much would come out, nobody knows, because the wish list is quite big. Reduction in GST rates, markets want something for it, rural slowdown, job creation. I think a lot of things people are expecting, but how much it comes out and how can fiscal prudence as well as making everybody happy, how that balance is strike is going to be, I think, a clear lookout for people like us or the stock market community.
Devang, would you buy Reliance? Nippon Life. It's not Reliance actually. It's Nippon Life AMC.
I think clearly we don't have any coverage over there, so it would be difficult to comment to buy that. But clearly the stocks that you were highlighting earlier, something like HDFC, AMC, or anything in the HDFC group. In fact, of course, that you know that it comes with a premium of surety, that there will be a lot of people who would be interested in buying those type of stocks. And financialization is a wave we have been playing it big time. So of course, HDFC Bank and HDFC remains that traditional, I can say, bonds in the portfolio, along with HDFC Life and HDFC AMC, both where we are trying to create some positions. So HDFC Life, with a disclaimer that we have across a lot of client portfolios, but HDFC AMC is again one stock where clearly the shift from physical to financial, of course, which is a cliche thing, which has started to happen. But I think more and more people coming into equities via mutual funds or coming into bonds via mutual funds will play out. I think HDFC AMC, HDFC Life is where we would sort of place our bets rather than anything unknown territory where we don't know how things would shape out in the near term.
All right, that's the view coming in. Meantime, Devang, just wanted to get in your thoughts as well as to what the outlook is when it comes to some of the IT companies. You know, do you believe that the kind of commentary that we've seen from the management with respect to the fact that their earnings could see some sort of improvement can be bought into? What are you identifying within IT?
I think it's clearly been a very, very strong, I can see, sort of a performance from IT stocks, again defying the trend where rupees sort of again started to appreciate a bit. Again, normally it's played with sort of a dollar appreciation, but contrary to that, this time there has been good strength, at least in the frontline IT stocks like TCS at least. So yes, we are not very, very overweight over there, but we would keep our bets ready, because if globally again there are going to be rate cuts and the increased liquidity, of course there is a slowdown, that's an acknowledgement of that. Probably during that type of a year, if your IT sustains and if the managements are a bit positive about what they were in the last couple of years, I think it makes sense to be some part parked in that type of portfolio. But to be very clear, we are more into niche spaces here, something like an L&T technology, which of course is not exactly technology but into niche type of work. Those companies will also find favor apart from Infosys and TCS.